Hey, Simple Passive Cashflow listeners. Today I have a great guest for you, Hunter Thompson from Cashflow Connections. How's it going, Hunter?
Great. Thanks again for having me on. Really appreciate it.
Yeah. So if you guys want to check out his website and podcast, it's Cashflow Connections. Don't get it mixed up with Simple Passive Cashflow, but very similar on our paths here, and thought we kind of get to know you a little bit better and kind of get an insight of another passive investor who's kind of doing pretty well too. So the question we always like to ask our guests, just to get a sense of where you're at, Hunter, is how much simple passive cash flow are you making today, and how are you doing it?
Yeah. I currently pay off my expenses via passive cash flow. And that's something that took several years through a variety of investing my own personal portfolio and then also syndicating investments and taking a percentage of the proceeds of those. So that took place around 2012. And, being able to support myself in Los Angeles and continue to do that. And we can talk about later in terms of, I really had my mind completely blown by someone. I was in a seminar and early on, someone mentioned that their goal that they're currently working on is 10xing their passive income to their expenses. And I was like, whoa, that is like something I never heard
Hmm.
before because so many people are working towards that. So,
Is that
when you
was
hear
it
something like
Uncle
that,
G or was it Uncle G?
it was actually, gosh, what was his? Mike Cantu,
Oh,
actually,
okay.
who is a well-known investor in California. And the way that he did it required a lot of work. And, basically, I just wanted to share that with your investors because once you do reach that other goal, you're like, what's the main one there? And it's like the 3x, the 5x, the 10x. So yeah, I've been able to do that. But once you get there, you're like, man, I just want more. I want more of the same. So that's kind of where I'm at in that process.
Yeah, so maybe take us back to, I mean, if you were working a day job earlier, what was kind of that Han Solo moment that kind of brought you to where you're at today?
Yeah. So, this is something that's kind of interesting. So, my grandfather was a very successful businessman in the 70s and the 80s. He had a cotton company that was the second largest international cotton company in 1976, and then again in 1977. And by 1998, they went through one of the most catastrophic bankruptcies in the history of cotton or business as a whole, basically going from more than $100 million of revenue to zero, to personal bankruptcy and business bankruptcy. The way this happened was a combination of a lot of leverage. He basically saw a shortage in cotton that was taking place, put a lot of leverage on that shortage, resulting in prices of cotton skyrocketing. And the shortage happened as he predicted, and the price increase did not happen. And because of how leveraged he was, the bank foreclosed on the business. He had also signed some personally guaranteed loans, which ended up personally bankrupting him. And through years of litigation, was able to keep a fraction of a percent of his net worth. And so my story actually starts back then, that fraction of a percent, tiny, tiny piece of capital and back then grown over 2 decades or 3 decades resulted in a small or reasonably medium-sized investment portfolio that I started my investment career with. And the reason I did that is just this incredible responsibility that I had seen what he went through, knowing that if he had just used more pragmatic, more prudent investor approach, just to save just a little bit more, that the entire financial future of many generations to come would be completely changed. And just to clarify that, I'm certainly not complaining, right? That lesson is so valuable. I've formed my entire life, my entire career is about the lessons learned from what he had to go through. And so, that's where my passive career really started, knowing what someone like my grandfather went through, realizing that you didn't have to risk it all to really experience lucrative returns, and then founding the business based on those principles. So, I can go into more details, but that's an interesting piece about my background where, a lot of people really focus on that transitional period. I was in a unique position to really start investing prior to being able to, from a W-2 perspective.
So that's kind of like my accidental landlord story in a way. So I kind of got started haphazardly, and you got this little portfolio. What exactly was it? And you know,
Stocks and bonds and mutual funds. And so when I first started looking at finances, I was very compelled by these assets. I knew that they were liquid. I knew that there was a lot of marketing around them in terms of how much money you can make in stocks and how historically things do quite well. And so when 2008 happened, I've always been the kind of person that really likes to go left when everyone's looking right. And I'm very countercyclical. It's very much in my nature. It's not always positive, but it's just how it is. So when 2008 happened, I was really excited about the opportunity from investing in stock perspective. And so I kind of went in with both feet. This was basically how I spent my day, during college doing this. And I was all in until around 2010. And this is when the European debt crisis really started to take hold. My last strong moment with this was watching CNBC, and they were talking about the Greece bond yields. And they were talking about how if the Greece bond yields went above 7%, that the S&P 500 was going to collapse. But if they stayed below 7%, the S&P 500 was going to be fine. And I just remember watching this thinking, how is it the case that the Greece bond yields are having any role in my financial well-being, let alone a significant role to where they're talking about it on a daily basis? And so that really led me down the path of trying to identify vehicles that could produce favorable risk-adjusted returns and that were simple enough so I could actually conduct due diligence without having a massive infrastructure. And so eventually that led me to real estate, and eventually that led me, to this conversation we're having right now.
Yeah. So you kind of went from that stock portfolio to kind of, getting started being a direct operator. At any point, did you have to burn the boats to, get rid of those stocks? Can you talk about how that happened?
Yeah, certainly. So, just to clarify, when you say burn the boat, so I was basically exiting out of stocks as I saw new opportunities come up. So I didn't have a last straw moment where I clicked sell, 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 sell. It was really rotating out. And because of the timing of the market, it was very favorable to be doing that, in the sense that I was able to experience a significant portion of that upside before real estate really corrected around 2011 and 12, because real estate typically moves much more slowly than stocks.
Right.
So, best of both worlds, obviously there. But I'm just not a fan of the vehicle, because I'm a huge fan of focus and productivity and identifying your goals. When it comes to financial goals, most people want cash flow to pay off their expenses, and they want predictable outcomes. The stocks do not give you either of those. So it's just a matter of identifying the vehicles which will most directly facilitate that and investing in them. And so, because of that, I've invested in a variety of different asset classes, but all of them in real estate.
Yeah. If I were to kind of do a pseudo poll in my head of investors I talk to, I'd say about 95% of them still have stocks. Probably about 80% of those have a great amount in stocks still. How did you transition out of the stocks? Do you still own any? Like, what did you get one investment, and what was it? And how did you get proof of concept and then transition out? How did you start? What was the tipping point for you?
So that's an interesting question, because a lot of us are obviously drawn to single family because it's an easy entry point. Especially if you're new to the space, that if you have $30,000, you can buy a property. Basically.
So much education out there, so many podcasts and everything.
Exactly. There's just a lot of marketing to that effect, especially at the time. But for me, my goal was basically to find predictable outcomes on a favorable risk-adjusted basis. I found that via debt very compelling. So the first investment that I made in the real estate sector was to lend flippers capital, kind of as a hard money loan, but also to buy self-created debt, in the sense that we would either lend money on properties. At the time, you could get incredibly favorable rates, 14% annualized return with a 60% loan to value, or let's say 70% on purchase price. Back then, 2009, 2010, that was kind of very achievable. Now, since then, the rates have changed significantly and makes that not as compelling anymore. But as markets started to correct, I started to look at single family, and the real challenge that I had with the asset class at the time was that the lack of scalability is one thing, but also the simplicity of the investment vehicle makes it such that there's not a very big difference between an absolute best-in-class owner, operator, or manager and a mom and pop owner. Now, that could be to the advantage of someone who just wants to buy one or two properties. But if you're trying to build a business around that, it's challenging to really get the benefits of all that goes along with the complexities of commercial real estate, for example. And I don't want to say, like, counteract what I was saying earlier about the simplicity of the investment. Overall, the real estate sector is is categorically different than the complexities of the stock market and the European bonds and stuff like that. So just wanted to make that point. But that was kind of when I started to really shift my portfolio as well as my career to focus on commercial, was just understanding that the more moving parts there are, the more of a unique difference an operator can have. And so that's how my passive portfolio is set up now to this day.
Yeah, and I heard it on a podcast recently. It was more of a marketing podcast, but they said in the tech world, 70-something% of all the market shares to like the best competitor out there. It's not, in the past, you'd have a little bit more, market share would be kind of spread out all over the place. But nowadays it's because everybody's so educated, the internet, Yelp, everybody knows that that's the best restaurant. So that's how the trend is. So that makes total sense, that just figure out who are the best in class out there. Buddy of mine does junior mining. He just figures out which are the best ones to invest in, which is the best management, and just goes with it. So great way of thinking of it.
Yeah. I mean, it's just one of those things where I want to be close enough to the asset to understand it thoroughly, but I really want to defer to others' expertise. And I think that's one of the reasons I was excited to come on your show. There's so few people that focus on passive income in the syndication space. And so I was very drawn to that. The idea that I could leverage an expert's expertise as well as their time, energy, access to capital, and liability. You're basically getting the best of all the options. And the return profile, in my opinion, is very comparable, but the time is not a factor. So you can really build your life around that. I ended up building a career on passive investments, and that's what we do as a company. But you don't have to do that. You can keep your job. You can do whatever brings joy to your life. You can continue to do, if you built up that portfolio and want to receive that passive income.
Yeah. So most people I talk to, they have some kind of a pain point story working in the day job. What was your funny one there?
Man, I'll be honest with you. So I very early on was really drawn to entrepreneurship. And so when I graduated college, I knew there was going to be an opportunity in real estate. I jumped in with both feet and, did some deals and had some success.
What year did you graduate?
2010. Right when that was really taking place. And the opportunity to me was written on the wall, just focusing on economics. But so I did deals for my own portfolio and then started bringing in friends and family and had raised, a total of $500,000 and really proved the concept that I knew how to identify lucrative opportunities. I knew how to transactionally handle raising capital, doing this all legally and issuing distributions. And so I attempted to scale. And the way I wanted to do this was to create a blog. It was called the cashflowsking.com. Obviously there's some similarities in the name. And don't go there now.
Right?
Yeah, yeah, exactly. And basically I created this blog. I started writing and the response was not what I was anticipating. I had some success as an entrepreneur through high school, through college, event production, various other things. I also worked for Cutco at a time and had success there, set records in that area. But so I anticipate this would be easy for me, right? So I was basically like, okay, I know what I'm doing. Historically, I've been able to make good money doing this, that, and the other thing. And it wasn't nearly as easy as I thought. And so there was a moment where I thought, if I can get a job making a reasonable income, this would be a good option for me. And I had success in real estate enough to put on a resume. And I started shopping this. And I ended up working. I also really wanted to increase my sales skills. So I ended up working for a company that put realtors on Google Ads. And I was there for a total of 6 weeks. This was the first time that I had really worked in this kind of setting. I am not cut out for that. I did not feel comfortable. The last straw moment was I had an injury on my shoulder, had to go to the doctor and get it checked out, get an MRI. And I went in on Thursday to say, tomorrow I have to go to this MRI. I just wanted to let you know. And the response to that was like, if you were like 4 years old and you told your parents that you like wanted to go out in the middle of the night, and they're like, wait, what? Like, did you talk to HR? Like, what do you talk? Like, I didn't know, right? This is like not my background. And their response to me saying that was when I was like, there's one option for me. I have to make this private equity company work. And that's when basically things changed completely for me. I mean, we went from having friends and family investors to scaling. Now we have a $10 million fund. We have 250 investors that are actively investing. But the difference between then and now is years and years of hard work and a lot of challenging times. But, it's been able to accomplish it. But that was a really scary moment for me, going from thinking that things would just go my way to being, really kicked in the mouth.
Yeah, because you didn't want to be treated like a little child. And I mean, that was you weren't going back to that. So you had to make it happen.
Exactly.
So a lot of the listeners are kind of high performing folks. They're always trying couple of different things. What are a couple of 2-week experiment and maybe a longer term project you're working on these days to give people ideas?
Yeah, sure. So I mean, we can do real estate, we can do non-real estate, but I'll start with some of the more interesting things. So I'm a huge fan of working out. This is something that I take very seriously. I'm definitely kind of in the intermediate lifter category if you actually talk to lifters, but I'm 160 pounds. I have a 415 pound deadlift. Most people, that's kind of like up in
good.
it's like something that I'm happy with. I recently been doing CrossFit workouts for the first time ever. I ran cross country and track in high school, but since then I have not wanted to do anything related to time because of the experience like in cross country and track. Just now, obviously CrossFit, there's a time component there and I'm really enjoying that. I have been meditating and taking morning routines very seriously. This is something, again, that maybe 2 years ago, when you're not optimally maximizing your entire day, once you start to push what's capable in a 40-hour work week or 60-hour work week or 70, whatever you choose to do, then you start looking at other ways to really optimize. And for me, the morning routine is a huge portion of that. So, and I can go into some of the details, but if you haven't read Miracle Mornings for Entrepreneurs, specifically the one for entrepreneurs, I highly suggest it. It's basically a boot camp about morning routines. Cameron Herold is one of those authors. And so that's something I've been experiencing with. You can try Headspace out. If it's not for you, it's all good. But it's basically, look, there's no better way to spend 10 minutes. It's free. You just sit and think. And I have had the results from that have been tremendous. So those are a couple examples of non-real estate related things, but those are some of the things I'm testing out now.
Yeah. If you guys want to check out that book, it's by Hal Elroyd. I also wrote a little ebook that is real estate, or the what is it? The Miracle Morning for Real Estate Investors. My little version of it. If you guys
really? Cool.
So if you guys,
I like that.
Email, you guys can. I'll send you to that. Or maybe I'll probably just put in the show notes here for you guys. But I guess the problem I have sometimes is, that gets you going. Maybe you have your coffee and then you're good for the next few hours. But then how do you deal with that 2 o'clock, 3 o'clock lull in the afternoon? Do you engage or get in the Headspace app again? Or
I actually have done. So
you're financially free, right? So you just take the day off at that point.
Right. Yeah, my schedule is completely insane. But just to give you an idea, I have actually found I don't do intermittent fasting. I do have a protein shake in the morning, but I don't eat at all until 11:30. That's when my lunch is. So I have found that doing intermittent fasting actually can power you through. So I don't have coffee in the morning at all. Being slightly hungry makes me focus. And so I've had a lot of really great success with that, to be honest. I do have coffee once I eat lunch. That's the only time I have it. But I will say, when you mentioned going back on Headspace, you will be shocked at if you haven't tried this, what you can get out of doing a 2-minute meditation around that time you were talking about. So if you're starting to feel groggy and you do a 2-minute breathing exercise, which can be led on Headspace, I have found that you can get at least 3 more hours just from doing 2 minutes. I mean, maybe that's just the placebo effect, but a placebo effect is one of the strongest things you can have in the world in terms of like psychology. So I'm down to keep that. But yeah, I mean, that's a reasonable strategy. And then just to be honest, I do pre-workout before I work out. So that'll probably power me through until like 8 p.m.
What are you using today? NO Explode, is that what the kids are using?
C4 is kind of the common one now, and that's the one I use.
Cool. So what is that simple passive cash flow number that you're kind of shooting for these days in your head?
Yeah. So just to clarify, when it talks about passive income, there's a lot of ways to do this. You can invest your own portfolio. You can raise money. So what my business does is helps people invest in deals that I am investing in personally, right? And so when we do that, we take a percentage of basically capital raised. It's not exactly
It's like a low
out
torque
like that.
mutual fund.
Yeah. Exactly. It's not exactly paid like that, but let's use rough numbers just to get an understanding of what I'm talking about. So if you could net out, let's say, a percentage of what you raise on an annual basis, right? So based on performance above a preferred return, which I think is achievable in today's standards, if you can raise $5 million and those investments perform over a 10-year period, and you can add and you receive 1% of that, that would be $50,000 in income on average once the properties are sold. So if you could raise $5 million a year for 10 years, you put yourself in a very good position in not a very long time, because that $50,000 a year will come each year over the average. So my goal is to 5X my expenses with my income. Now, it's not exactly passive income. It's my entire job. It's my entire business. And we have plenty of expenses as a firm, but that'll kind of give you an idea of what I'm heading for. And one of the ways to do that is increase your number of investors and deliver on the promises you have with your current investors. And so we have about 250 right now. I think that we're on our way to having 600 by 2020. And with 600 investors investing $50,000 or $75,000 a year, you can make some really significant moves in the real estate sector especially when you leverage. So that's my goal, and that's my vivid vision of the company, is being able to do that. The reason I focus on growing the investor base is it shows you that I am 100% focusing on investing in properties that can perform. Because if that doesn't happen, you realize that that's how valuable those 600 people are, that they can completely change your financial well-being. But if you lose them, it's like, that's it. I mean, they're worth so much. So the whole business is focused on trying to make sure that experience as an investor is awesome, and doing the two things you want to do, which is protect and grow investor capital. So that'll kind of give you an insight in terms of my personal strategy and my vision.
Right. The bigger it gets, the better deals you get, the better returns you get for them.
Exactly.
So what are you going to do after you do this for 5-10 years and you get to that point? Are you going to kind of like delegate it out, or just what's the vision?
Yeah, I think, if you've ever done this exercise, then it's really, really powerful. Basically write down everything you do during the day, all the activities. Usually it's somewhere between 20 and 40 things that you do during the day, and rank yourself in terms of how much of an expert you are at each of those duties. Either you can do 1 through 10, or you can do, unique ability being the highest, E being expert, being uneducated, et cetera. You can just put those in a ranking and figure that out. And then your goal is to make it so that more and more of your day is doing things that you're an expert in, or it's your unique ability, meaning only you can do that. And so I'm constantly working towards that. And in the event that I'm able to get up into that 90% range, my day would be inconsequential, whether how much money we had or how much investors we had, because I would be operating at something that I love doing, that I want to jump out of the bed every day and do. I mean, right now we're doing something that I absolutely love doing, which is communicating and helping educate other investors. So if the bank account had 3 more zeros in it, I would be doing something very similar to this. I just really like building relationships and sharing this, because I feel morally obligated to help people get money out of the stock market. A lot of it has to do with what my grandfather had to do with. A lot of it has to do with what I saw at the European debt crisis. People should not be subject to those types of risks.
Right. So in this seller's market where, people are using the term, well, maybe it's the 8th inning and an 11th inning ball game. what would you suggest somebody who does not have a substantial level of net worth, maybe 200 grand to their name, and maybe only able to save $10,000 or $20,000 a year? What would you say that they should invest in or be their next step?
Yeah, it's a good question. I think that the best investments on a proportional basis that you can make are in education. And that obviously is something that gets tossed around a lot. But this podcast, the one that you're producing, can be just a tremendous amount of resources, not only in terms of the education, but in terms of the networking component. So if you reach out to Lane, if you reach out to people that Lane is associated with, you will quickly see that the snowball effect can manifest in significant ways. Then the path will be very clear in terms of where that $200,000 will be allocated. I'm extremely cautious about diversification, probably to a fault, but my real goal is to be able to sleep at night. So when I'm talking about a building and portfolio of $200,000, I would want to be in at least 5 investments. And I think that's possible. If you guys are associated with Lane and the opportunities that he has available, you can diversify. And I would feel comfortable with that. I think that's a great way to start building that portfolio. And $200,000, that is nothing to scoff at, right? You're well on your way to building that if you're able to execute and invest in properties that are going to deliver.
Yeah. So you and I are both big proponents of self-storage and mobile home parks. Maybe not maybe multifamily on like a case-by-case basis. Mm-hmm. And then, everybody talks about assisted living. Any other next frontier that you're kind of looking at these days, or?
Yeah, I mean, you mentioned assisted living, and I want to touch on that real quick because there is a tremendous opportunity there. The asset class is very unique, and this is something you may have talked about in the podcast before, but there is a lot of the focus in the asset classes on development, which is something that's slightly outside of my risk profile, especially when it comes to raising additional investor capital. But then the other companies, many of them are extremely well-funded. Some of them are publicly backed. So they don't need guys like, my firm investing $3 or $5 or $10 million. And even if they did, the terms wouldn't be good enough to allow it. So I'm constantly reviewing deals and constantly going through due diligence on those opportunities, but it's challenging because of those metrics. There's also this interesting dichotomy between the owner operators and the managers and the sponsors. It's a very different space. I do think it's possible that we're going to have something in 2018 or beginning in 2019, but that is something that I'm very interested in. And in terms of the future, there's a lot of different ways to make money in real estate, but I like the stuff that has been proven over and over again. So there's a tremendous opportunity in Airbnb. There's just a lot of regulatory hurdles that you may have to overcome. Maybe if it was 10 years ago, I'd be really interested in that. But I think, from an investment standpoint, I want to be diversified. As an entrepreneur, I want to be hyper-focused. So balancing those two is important. And mobile home parks, self-storage, and then when the timing is right, multifamily as well. I think those will be a really solid basis for your portfolio.
Yeah. Something I've been looking at recently, I know people will think is kind of crazy, is retail shopping, like the strip malls. Obviously because Amazon is coming to kill every retailer out there. But the thesis is that, people need to go to get their hair done, go to the dentist, and they're going to need stuff to buy. What's your thoughts on that? I mean, I think like stores like Macy's are going away eventually, and like the Toys R Us, they get so much press. But maybe because it gets so much press, is there opportunity for guys like us to kind of find one-off deals here and there? Or what's your thoughts on that sector?
I think that's a great question. And it's actually the first time someone's asked me that on a podcast, which is really good sign. Usually when people bring up retail, they're horrified, right? So what does that mean? It's probably an opportunity there. I just recently interviewed someone named Michael Flight. I don't remember the episode number, but he is.
I've met him. Yeah.
Okay, cool. So, I mean, they're very active right now. They're focusing on it's all about the tenant base. It's all about the rent roll. Can the rent roll substantiate and can they sustain through a internet change in the internet, right? And are they subject to the Amazon threat? So Dollar General, for example, those make great tenants. I think you mentioned the nail salon, for example. Restaurants, very hard to outsource that. The real key, though, the thesis is that people need to go and get those things, but I'm much more compelled by the fact that everyone's horrified by it. And so because of that, I anticipate seeing a significant cap rate expansion when things do start to turn around.
Right. you zig when everybody's zagging is the takeaway.
Yeah.
So the last question here we have is the Tony Robbins question, and he talks about two things: the art of fulfillment and the science of achievement. So first, what's your secret or hack to the science of achievement? Any habits other than meditation to share? You maybe kind of go into your morning or nighttime rituals.
Yeah, I mean, we talked briefly about the morning routines, but something that I'm an investor in a startup called Thrive Market. I'm friends with the CEO, whose name is Nick Green, and he had a really interesting experience. He and his partner is Gunnar, and they had this idea. It's basically Whole Foods online, right? If you guys are members, it's thrivemarket.com. You get a reduced price for a lot of the things you may buy at Whole Foods, non-perishable goods. They came up with this idea. Both of them has tremendous track records as entrepreneurs prior to starting this company. Went out to VCs, and I think they interviewed more than 100 VCs and pitched more than 100 VCs and got no's across the board. Not like, we'll call you back. Not like, let's get your information. Just like, no, we don't want to compete with Amazon. This is not a good idea. Goodbye. And after doing this, they ended up raising money from private investors. And this is why I got the opportunity to invest in a company like this. When they were going through that process, Gunnar basically realized what had happened. His background is not the typical VC background. He got a GED out of high school and went to community college, then started a really awesome company and sold that company. But he was trying to not let the VCs know that that was his background. You know, going in and interviewing with these guys that are Wharton grads, it's hard to not feel like intimidated by this despite your background. So him shielding that from them, when you shield something from someone, especially if you're trying to get their money, they know that you're shielding something from them, but they don't know what it is. So they assume the worst. His story made it so that he could not raise money from any of these companies, but it wasn't the story. The story is compelling. This guy went to a community college and started an education company and sold it for millions of dollars. And then it's on to his second venture. So as soon as he started being authentic about who he was and being upfront about that, the story changed completely. And they actually ended up, their Series B was one of the largest Series Bs in the history of the United States, up there with Airbnb, because of that change in mindset. So that's my one takeaway is, if you feel like you're hiding something from yourself, everyone has something like that. Just be honest about it, and people will find that interesting and compelling.
Right. Good. And your secret or hack to the art of fulfillment?
Yeah. So, I mean, this is something that I'm still in the process of figuring out, right? A lot of people talk about giving to charity, and I've got my interesting views on charitable contributions and how it tampers with market forces, particularly things like, foreign aid. I'm a big believer in disaster relief. And I have, when something goes wrong, that's where the charitable contributions come in for me, because I think that those quick, explicitly focused charitable things are the ones that actually give you the results that you're anticipating seeing. I hate seeing this fraud that takes place in the charitable industry as well. It just drives me insane. But I'm still in the stage of learning more about that. And, hopefully I'll have come on your show in a year or two and have a better answer, but that's where my focus is disaster relief. And, there's plenty of companies that specialize in that.
Yeah. No, great way to think about it. Yeah, for sure. Because I know a lot of people, you're on two sides of the coin. You give away a certain amount every year religiously, or you're like, well, I'm going to hold on to this because nobody else can grow this money like how I can, and then give it all back at the end, or once you reach over that crest, and that whole idea of putting your own oxygen mask on first before helping others.
Right.
I totally see that.
Exactly. And I think that, especially as investors, it's one thing if if you don't have the outlet to grow capital, to make capital turn around. I don't invest because of moral situations. That's not, I don't want to invest in anything that I think is immoral. And I have passed on many investments because of that. But I have also seen the way that capitalism and the free market can turn neighborhoods around. One of the podcasts, we did together, you mentioned Memphis. I'm from there. I have seen what investor activity has done to that city. It's incredible. There have neighborhoods where every single property has been completely rehabbed and completely safe. Mobile home park business is another example of that. You take a property that's completely mismanaged, turn it around. People that have lived there for 10 years come back and thank you. I mean, there's all those things are great ways to make money, but there are also ways to make people have a safe place to live. So, still balancing that is, a challenge some of us struggle with, and some people don't have any moral compass whatsoever, but that's not the way that I like to invest.
Right. And that, we're on the last time we were chatting about the crowdfunding sites. I mean, overall, I mean, that's a great thing. I mean, I would not invest in a crowdfunding site because I just go direct, and I'm sure you're the same way. But I mean, just think of this movement of like people getting out of Wall Street where everybody's taking all the profits and putting it in more direct projects that are kind of more B, C class level instead of just goes right to the A class and gets funneled down. These are kind of like the, using the term from Trump, the helicopter projects, where projects money gets infused right into like regular people's hands.
Totally. 100%.
But yeah, what's your get your contact information and people get a hold of you, and then we'll have you on in the next year or two, and you can kind of tell us where you're at again.
Yeah, sure. So again, thanks again for taking the time to check out the episode. The contact information is Hunter Thompson at cashflowconnections.com. You can go to my website, cashflowconnections.com. And if you like podcasts, happy to have you as a listener on the Cashflow Connections Real Estate Podcast. Just had Lane on recently, and I'm sure that episode will be available soon. So thanks again.